Good morning, 7:45 a.m., the 31st of July 2009. This is Henry Liu. Looking at today's market, we are seeing some risk appetite during the Asian and going into the London session. Now, in about 45 minutes, we're going to get the advanced GDP data out of the US, and we're seeing some market reaction just prior to that. So far, market sentiment has been pretty risk appetite, I have to say. Analysts are expecting that this number will show that the second quarter US GDP has improved from the first quarter, and basically we should see less of a contraction, and hopefully by the third quarter we'll actually start seeing improvement in the overall economy of the United States. So we see some early market movement. US dollar has been under pressure. As a matter of fact, it's been losing against most currencies due to this possible better than expected GDP number. And we're just seeing some renewed sense of risk appetite coming back to the market. Overnight, we're seeing some movement in the yen crosses. If we take a look at the pound yen and the euro yen, we can see that the market has really moved up in anticipation of this news release. See about 127 pips of up move on the pound yen and about 113 on the euro yen. Even on the dollar yen front, we're also seeing a movement of about 60-70 pips, and for the dollar yen pair, that is significant. So overall, the market has been pretty risk appetite in that sense. And what we'll do is we'll wait for the number to come out, and then we will see if the number will give enough surprise to the market so that we can take our trade in one direction or the other. Now, once again, this is going to be the quarterly GDP for the second quarter of 2009. It is called the advanced GDP. We do get 3 GDPs releases for the quarter. The first one is usually the one that has the most potential to move the market because it is the first estimate, and that's why it's called the advanced. And then we'll have the second release, and then we'll have the third release, and those usually come out most of the time as expected. So the advanced, preliminary, and the final GDP for the United States. The number is expected to be at a negative 1.4%, and we all know the first quarter GDP is a negative 5.5%. So what we're looking at is at least a 3% of deviation from this number. So if we get more negative at the negative 1.7%, then we should be looking at some risk aversion reaction in the market. If the number is better than 1.4 by at least 3.3%, then at the negative 1.1% or better, then there's a possibility that market will take this as a sign of improvement, and we should see high demands in yen crosses as well as high yielding currencies. So we'll be looking at will be the US dollar JPY pair, and for that matter the pound JPY and the euro JPY pair will be the same. So we'll wait for the number to come out, and we'll wait to see if we get any kind of conflict with the previous first quarter release. Hopefully there wouldn't be any conflict, and then we will gauge the market reaction, and then we'll decide what to do. I think if we get a more negative than expected, market is going to take that as a sign of risk aversion, and then we should see JPY strengthening across the board. We'll see US dollar under pressure, of course, but then we should see JPY becoming the strongest currency, and the pound yen, euro yen, even dollar yen are all going to start going down. Now, if we get a better than expected number, then what's going to happen is high yielding currencies such as the Audi, the New Zealand, are going to be trading much stronger than the US dollar, and the yen is probably going to trade much weaker. It will be probably the weakest currency. So we will get a chance to trade the pound yen and also the euro yen for long trades. So that's basically the plan. We'll wait for the number, wait to see what kind of market reaction is there, and then we will decide what to do. So always be careful and exercise extreme caution, especially in this big trade. Now at the same time, we're also going to get the Canadian GDP month over month, and because of the release is coming out at the same time as the US, I think it's better to only concentrate on one, which is the US GDP, rather than the CAD, because the US number will probably affect all the currency pairs out there, since it will be driving the risk sentiment. So it's better just to concentrate on one than the other. But in case if you wanna trade the dollar CAD, the idea is basically the same. Better number will look for to sell the dollar CAD. Worse number will look to buy the dollar CAD. But because it comes out with the US number at the same time, maybe the better choice will be Euro CAD, which will not be affected by the US news, but then we'll just look at the CAD strength from that point out. We're seeing some on the 30-minute chart. We're not seeing any kind of direction with this. Most likely the market is pretty much range bound trading, so not much of a direction prior to this number. And once again, I personally will skip the dollar CAD trade, but I will concentrate only on the USD trade. So it's going to take place in about 37 minutes. So I'll be back and we'll look at this number live together, and then we'll see if there's any trade that we can get into.
T-bonds up 0.2%, 117.08.
Once again, we're about a minute before the GDP release.
And 1 minute to the GDP data. Second quarter advance GDP expected minus 1.5%. Consumption expected 0.5%. Minus 0.5% expected for consumption. GDP price index expected 1.0%. Core PC expected 2.3%. Employment cost index expected 0.3%. Also get Canadian GDP for May at the bottom of the hour. I'll also be watching out for Chevron earnings.
So again, we'll be looking at the dollar-yen pair.
Second quarter advance GDP expected out in just a few seconds. Minus 1.0%, 0.5 higher than expected, again minus 1.0%. The revision in prior to minus 6.4% in first quarter. Prior was minus 5.5%. Personal consumption at minus 1.2%, a 7/10 lower than expected. Price index 0.2%, 8/10 lower than expected. Core PC at 2.0%, 3/10 lower than expected. Employment costs at 0.4%, 1/10 higher than expected. Canada 2/10 lower than expected at minus 0.5%. Prior revised 1/10 lower to minus 0.2%. Chevron.
Okay, we're getting conflicting numbers. So right now there's no trade for the time being. We're getting very low.
First quarter seeing a revision of minus 6.4% versus the final reading in first quarter of minus 5.5%.
Back on Chevron, noting their U.S. downstream operations incurred a loss of $95 million in the second quarter. Shufflemaster reported a new CFO, and Digimarc DMRC reported revenues for the quarter of 4.3.
Okay, we're getting conflicts for the GDP number. Personal consumption is negative 1.2 versus negative 0.5, but the actual GDP is negative 1.0 versus the negative 1.5. So it is better on the headline number, but it is not better for the other components of the GDP. Right now, it looks like a initial reaction was to sell, was risk aversion type of reaction. We're seeing the yen getting stronger a little bit. We're seeing some strength in the US dollar. Market is kind of mixed with this because a lot of pre-market reaction was risk appetite, because there are talks before this news release of maybe we'll see a positive number. Instead, we're still seeing a negative number. It's a little bit better than expected, but not much better. We're seeing some retracement in the market of the pre-movement, so we're gonna see some buy the rumor, sell on facts reaction right now. As we can see currently with the dollar yen has dropped about 20 pips from the release. So let's take a look at other currencies such as the euro yen. Euro yen dropped from the release about 30 pips. Let's also look at the pound yen. I think pound yen might be a better currency to trade. If the market returns back maybe the 158.08 area, 158.10 area, then that will be a good area for maybe a sell. And for the euro yen, if we see maybe 135.15, that will be an area for a sell on the retracement. We see a lot of pre-market pricing in of this news release because there were rumors of a possible positive release, and we're seeing a lot of traders getting out of the market right now at this moment, and we're seeing the price going down on the euro yen and also on the pound yen. We're seeing Japanese yen getting stronger by the moment right now. So let's wait for some kind of retracement. If we get them, then we'll look for a sell trade. Remember, this will be something that's against the numbers, because on a better than expected number we shouldn't see Japanese yen strengthening, but instead we're seeing it because we're seeing some buy on rumors, sell on facts type of reaction. We're seeing different expectations of the market, and we're seeing basically just a complete reverse of our analysis. But as we can see how the market reacts to the news and also to the conflicting components, it's better to stay out. So we're staying out of the market this moment. We'll wait for that retracement, and if we get that retracement, we'll jump into the market. So stand by for the time being. Okay, it is 6 minutes after the GDP report. We're basically confirming that the market is probably looking for a positive number, and they're not getting it. So we're seeing a complete reverse action in the market. So we're gonna follow that by taking a small trade. Remember, this is just for recording purposes. Okay, we just took 2 trades, and we're gonna see how the market is going to react with this. Looks like we're already positive on one, about 7 pips, and the other one we're down about 2 pips. But looks like the market will continue to go down with this. So stand by. Okay, everybody, it's 9:24 a.m. We're showing 37 on profit right now with the pound yen pair. 157.56 entry. Now it's 157.18. I'm gonna go ahead and close it. And we're showing about 13 pips of profit on the euro yen. Entry was 134.69, 134.55 right now, so it's about 13 pips of profit. I'm gonna go ahead and close it. It turned out to be a pretty good trade. Total about 53 pips of profit in a matter of 45 minutes. Not a bad trade indeed. So able to make some money following the market trend. Even though we got the deviation that we're looking for, the revision was much worse than expected, so we have a conflict. So instead of going blindly following the numbers, we made a good trading judgment during market time by analyzing real market condition. And that's one of the things that's so important with waiting for retracement, because that gives you time to react and to analyze the market. You know, we have the luxury of doing that, so we might as well just use it. Look at how the market reacts, and don't get fixated on the numbers, because we do have an expectation prior to getting into the market, but we have to be flexible in trading. And by able to look at the market live and jump in at the right time like we did, we're able to pick up good 50 some pips and basically without having to endure much of a drawdown. Okay everybody, before I close for the week, just like to give you guys, in case I forgot to mention before, the consensus is actually a negative 1.5%. However, the release came out at negative 1%, so it's actually 0.5% better than expectation. But a revision to the first quarter data came out from a negative 5.5 to a negative 6.4. So we actually have a negative 0.9% of revision, and that basically cancel out the positive release number. On top of that, there were some rumors of a possible positive release. Instead of a negative 1.5, there are traders that were actually expecting a positive release. So what we saw with this number, market took that as a negative sign, because the expectations were a slightly negative to a positive number, but the revision basically just took over the market, and the market just decided to concentrate on the revision instead of on the other numbers. And there are different components within the GDP number, and there were also conflict. It's not really everything just going one way. So even though if we just look at the headline number, we will say, oh, this is a trade for risk appetite. But what's more important is actually being able to analyze the situation in a real-time manner and jumping on a trade based on that. So once again, that's why we do retracement trades, and we don't get in right away. We actually wait for the market to react before we jump in. It's one of the safest way of trading the news, and as you can see, do have great opportunity and chance to make good pips. Anyways, this is Henry. Have a nice weekend.